from Noble Gold with us, and what a time to get some expert opinion on your finances, on your IRAs, on your retirement accounts, your 401k. What should you do in this volatile world we live in? And the man to give us the answers is Charles from Noble Gold. Charles, great to have you on the broadcast today.
It's my pleasure to be here. Thank you.
Charles, I'm looking at your website there at Noble Gold, and I mean, obviously gold and silver, very precious metals. Why is it, it is the currency of choice like forever. I mean,
True.
Do you still say that people should invest in gold and silver?
I do. It's one of the few things that has real value to it. I think when you look and the term fiat currency, this grand experiment we've been on for the past 50 years, has proved not to be so fantastic. So I think, when you're looking at it's one of those who are investors and savers, it makes sense.
Now, whenever you think about this, obviously the stock market, one thing to look at is, of course, we had the terrible 2008, beginning of 2009. It wasn't only the stock market was having a difficult, but this was basically a tremendous, the foreclosures. We broke records, 2010, 2011, as you know, and jobs, losing 1 million jobs a month. But there's been a turnaround, and the stock market has been gradually on the rise. And then since the election, there's been like this unbelievable, we're over 21,000. I don't know, does President Trump, some of his policies of deregulating business and maybe corporate tax structure cutting, is any of that also fueling the fire, the acceleration of this market?
You would think so, but that's not the case. I mean, those corporate tax cuts haven't taken effect yet. And economics are a slow animal. They don't move quickly. There's many great things that President Trump will do. He is a businessman after all. He understands economics from a business point of view. So that's going to help us. But what's happened is not due to him. What leads us out of the trouble that's yet to come will be from him. But what's going on now is an accumulation of the past, some say 16 years, others say 25 years. So it's a scenario where what's to come is not due to President Trump. How we get out of it will be.
Okay, and that's good. And matter of fact, at your website, folks, if you go to the website right now at noblegoldinvestments.com, if you go there right now, there's some great information. As a matter of fact, I clicked on the news section there. You've got a chart, debt to GDP.
Yes.
For new presidents. We'll put that chart on the screen. Can you tell us what this means? I mean, walk us through this.
When you're looking at that, the amount of debt that a country has compared to the amount of money that they make, that's what the GDP is, the gross domestic product. To put it in layman's terms, we're bankrupt. We owe more than we make. That's never good.
No. Never
good. So when you look at scenarios like that, debt is this monster. And we are told, there are biblical principles about debt and what it does to you. Right. And this nation, we are suffering from that debt. So when you see the amount of debt that we have, okay, and it's a bad ratio, but more troubling is going to be that GDP number goes down because we don't have the jobs in America that we need to have yet.
Wow. So I guess when President Trump is saying we need to bring back the manufacturing base, and he's even talking about doing tariffs, I really wanted to understand this. I understand bringing back the manufacturing base, critical to America. We should have never let it got away like we did over the last 40 years. You can't blame any one president for this. It's been a process. But
exactly.
when he talks about tariffs, he's trying to make imports and exports more fair. How do you see that playing out in the economy?
It's going to be really important for us. There has to be a reason for most people to buy American. Most people are determined by the cost of items. So the only way that you can compete especially, and let's talk about the biggest culprit here is China. Okay,
Right.
they purposely devalue their currency so that their items cost less, so that people buy them, people import them. That's how they maintain their economy. So there's two ways that you can compete. You can either devalue your own currency and get into this race to the bottom scenario where everyone keeps lowering their currency to compete, which doesn't help those of us who managed to save some money and put it away. It's devastating to us. Or you can impose tariffs to level the playing field.
Right. And by doing that, it will incentivize the American consumer to buy American, which in turn,
Absolutely.
if we move the manufacturing bases back to America, it puts people back to work. I mean, it's pretty common sense, really, but we've really got away from what built this economy, what built this country, didn't we?
We did. And the best example is take a look at Detroit. That's what happens when we lose our common sense and we forego doing what's right for America.
Unbelievable, and it's exactly right. And it's boy, do we need to work on our infrastructure, but mainly bring back our jobs by incentivizing businesses to bring those factories back, invest in America, and even if there's some foreign nations want to come and build factories, I think that's what Japan's going to do. I think Prime Minister Shinzo Abe, that's what he basically said. They're talking high-speed rail and different investments. So, encouraging.
It makes sense for them, too, if you think about it. By doing that, they're going to go around those tariffs. They're bringing the structure here. It makes financial sense.
Wow. And they can use U.S. steel, as we've heard the president say. So that helps Detroit, Pittsburgh and U.S. steel in near Chicago. And let me ask you a question. You said where people should invest their money or put their money or save their money. And we're talking paper currency compared to gold and silver. Can you help us understand how can people get involved in investing in gold and silver?
Absolutely. One of the things that we do, and we've been doing for many years here, is helping people get diversified. The process of owning physical gold and silver, whether you have funds outside of an IRA and you just want to hold the metals, you can do that. If you have an IRA account or a 401k and you want to get that protected, we can help you do that as well. It's really a simple process. You give us a call, we show you what options are available to you. In the case of IRAs, we help you with the paperwork to get it all done for you. I have a whole team here that does that, okay? And then we get you diversified. Get the precious metals. That's your best balance against a scenario where you see the dollar's getting weaker, okay? Yep. The stock market is overvalued. And real estate, there's some bumps ahead for real estate, and we're beginning to see the rumblings there. So when you look at what the feasible options are, you're really left with saying, you know what, I need to have some precious metals. It's gonna be my insurance policy against the rest of the things that are happening.
So basically, paper value of paper money currencies, the U.S. dollar's been weak for some time compared to the other world currencies, and so even property, as you said, real estate, it can rise, it can fall. A lot of people, they put a lot of their value, their net worth is centered around their home or their property. But you're saying if you really want to be safe, invest in gold or silver. Now, you can actually have the physical gold or silver in your hand, and your company will deliver it right to their door, or they can take their IRA and roll it into a gold or silver backed IRA. Is that what you're saying? Correct.
Both scenarios are possible. And when we talk about that IRA, know that it's physical metals that are being held for you. It's not paper equivalent. It's physical metals being stored in a vault for you.
So I don't know
IRA's name.
So I don't know what gold is right now. Is it like a $1,200 an ounce or something? I don't know.
Yeah. We're about $12.20 an ounce on the spot price, correct?
So let's say somebody has a 401k and let's say we'll just take somebody, go with simple money. They got $10,000 in a 401k, but it's in the stock market, divided up into different sectors of the market. If they were to take that and roll that into a gold standard IRA, that $10,000 would be based on that many ounces of gold, so whatever, eight ounces of gold, whatever it is, and that would be it. Didn't matter what the stock market does, their IRA would be based on the value of gold.
Correct. And I'd like to add, silver too, gold and silver. Everyone talks about gold. It's the catchphrase, but we deal gold and silver, and most people should do a combination. But yeah, that is absolutely correct. That IRA will now be in physical, tangible assets, the metals themselves.
Now people can also have the gold and silver shipped to their home or delivered to their door. And of course, they're responsible for it then once it gets in their hand, the tangibleness of it. And you'd like to see people maybe do a little bit of both?
Yes.
And reason why?
Well, when you look at metals, gold and silver right now is extremely undervalued. I think both metals are undervalued right now, but silver more so.
Wow.
So when you're looking at it, and the reason we talk about both metals is it's a little diversity inside the metals as well is good for you. Silver is a little bit more volatile. It bounces up and down a little bit more. But I think when you're looking at the metal scenario right now, it has the greatest upward movement and upward pressure of the two metals. You could see a scenario where it outperforms gold over the next couple of years by a pretty significant amount.
There's room for it to grow. In other words, right now, I don't know, silver's probably $18 to $20 an ounce, let's say.
Just under 18, correct.
Okay. Let's say, so could you see a day where silver's $100 an ounce?
I could. And it wouldn't be that hard to get there.
Do you see a day where if gold's at $1,200 an ounce, do you see a day that gold could be $2,000 an ounce?
Absolutely.
But if you look at the numbers I just said, you'd be better off investing with silver. Which one's going to get there first? Silver going to get to $100 or gold get to $2,000?
It's hard to say, but here's the great thing. You're a winner either way.
Because no matter what paper does, you've got the gold. You've got the silver.
Exactly.
All right. Well, here we've got another chart here I want to show, and that's how does the government spend their money? Okay? You've got it on your website. Folks, this is Charles. He's from Noble Gold. And go to his website at www.noblegoldinvestments.com. That's noblegoldinvestments.com. And he has a chart on there in the news section. And this kind of stunned me. It kind of scares me, to be quite honest. The United States, where does the government spend our money? We spend $362 billion on safety net programs. I'll ask you what that is in a minute. We spend $546 billion a year on Medicare. We spend $602 billion on defense, but we spend $888 billion on Social Security. Now, we've got almost two people. I don't even know how many people are on Social Security compared to every person working. This is really a dangerous scenario as the baby boomers. I'm one of them. I'm 55 years old. So as we get closer to 70 and there's tons of us, who's going to pick up the tab? This is a huge number. Is this part of the problem with the government's overall debt?
It's part of the problem of the debt, but it's not the biggest problem of the debt. That's a separate problem. That's more of a social debt problem. Okay, we have to remember that at one point Social Security was fully funded, but we had a Congress that kept borrowing against what was in that fund.
So they've borrowed till they've overborrowed the total
Absolutely.
amount. So again, now help me out here because. If the United States would have kept a gold standard, okay, then we couldn't have borrowed all this money because, a gold standard is just that. The currency is worth the value of the amount of gold a country has and the value that the gold is. So what happened? we went away from that and went into this quantitative easing, and we're just printing money, aren't we?
We are. And really what happened, if you go back to President Nixon, and that's how far back you have to go, we had a scenario where the government needed to be able to print more money to grow. We were on a gold standard, though, so we couldn't do it. We were limited.
Right.
I'm not someone who says that we should strictly be on a gold standard.
Okay.
What I'm saying is fiat currency works if the people who run it are responsible, and that's where the problem lies. They're not responsible to handle it the correct way. So as a government, it needs the flexibility to be able to infuse a little more cash into the economy and then remove some as well. That helps to create an overall strength. But that's always meant to be a short-term solution, not a long-term solution.
Right.
And what we had was a scenario where we needed to get off the gold standard so we could create some more money. We needed to be able to expand the economy to grow.
Well,
So
that's that debt ceiling. In other words, the Congress, for the budget, Congress couldn't extend the debt ceiling while we were under a gold standard. They had to go to fiat money, go to monopoly money, and then that way they could raise the debt ceiling, print more cash, throw it out there, but that weakens the value of that cash.
Correct. And that's where that began that process of the government telling us that if we had 3% inflation, that was a good thing for us. And a lot of people shook their head and said, yeah, that sounds like it's a good thing for us. If you really think about that number, that means in the course of your lifetime, that dollar under the best of conditions will lose half its value or more.
Yeah, that's not good. That's not good. And that puts us in a vulnerable position now as our currency compares to the rest of the currencies of the world. The weaker the U.S. dollar, the weaker the Americans' position globally, and I think it affects countries or companies as well. So let me ask you a question. Bitcoin, I just got to. I was dying to throw this one at you. Bitcoin, 2 days ago, the value of one Bitcoin surpassed 1 ounce of gold. And yes. Can you help us understand, is Bitcoin for real? Is it here to stay? Is it something people should look at? What is the story with Bitcoin?
You know, Bitcoin is very interesting. I'm one of those people that I don't talk bad about Bitcoin. Okay. Bitcoin exists for a reason. The reason is people don't trust the dollar. They don't trust the government. The only reason cryptocurrencies take any effect is because you don't trust what's happening right now. A lot of my clients, they'll have gold and silver, but they'll also invest in some Bitcoin. It's the same vehicle. The difference is you have physical metals, something you can touch. With Bitcoin, you have this electronic currency. Can't physically touch it, but it does the same thing. It says, I don't trust what's happening right now, and I don't want to be left to suffer the consequences of this economy. I want something that's going to give me some protection. I want something different.
So is Bitcoin now trading along with the rest of the currencies of all the other nations, or is it still on its own out there?
It's still on its own. As big as Bitcoin has gotten, it's not big enough for that global effect yet. Doesn't mean that it won't get there.
Will there
but
be
it's
a
going to
nation?
have a hard time.
Well, will there be a nation or one or several nations embrace it and make it the currency of their country? Could that happen?
You know, it could. When you see a scenario where we're going to see massive pullbacks in the stock markets around the world, you know, you're looking at ratios right now, the price adjusted ratio of the stock market's at 29.18 on the Schuler's list. That's a dangerous number. It's only been up that high 3 times in the history of the stock market. And that was in 2008, 1999, and 1929.
Ugh. Oh, you threw 2 of them out there I don't like. I mean, and 99 either, for that matter, because, well, we got ready for the Y2K thing and everybody was freaking out, but 1929.
It was also the tech market bubble.
Yeah, that's what it was. It was the tech. It was the .com era. Everybody was doing IPOs, and it was everybody was investing in companies based on potential instead of performance.
Perceived value instead of real value. Yeah,
Yeah.
and that's a big issue.
Yeah, that's two birds. A bird in the hand's better than two in the bush. So, 1929, the stock market crashed. We got people jumping out of buildings. 1999, we were, believing in the potential above the performance of the profits. 2008, 2009, our excessive debt and out of control spending and an irresponsible federal government brought us to our knees. And you're saying we're back there again?
We're back there again. The disappointing thing is how quickly we got back there. That's the disappointing thing.
Well, we didn't change anything. Okay, so Bush and Obama. Let's talk about the fact. Right at the end of the 2008 presidential elections is when the bottom fell out, and so there was this huge spending spree, $2.9 trillion for TARP to bail out the six largest banks, and 2.8 surplus, stimulus package to bail out. I don't know who that bailed out. I heard about shovel ready, but all I saw was windmills and alternative energy companies going belly up after they got large amounts of money. Okay, so I really don't feel good about what we invested in. Now we're back. We're back. What do we do now?
Now you're going to see it's a very similar scenario, except that it's worse this time, and I'll tell you why. When the market goes in half again, because based on that ratio we just talked about, the Shula ratio, 10 to 15 is good. So we need to go in half. So you're going to see, the markets correct by half again, just like they did in 2008. If you look at the total adjustment was about 54%. You're going to see about $50 trillion of wealth disappear around the world when this happens.
So people shouldn't be investing. If you invest in the stock market, you got to know what comes up is going to come down. And to your point, it's going to come down. So there's going to be people right now that might have tens of thousands, hundreds of thousands of dollars in paper money because of the value of the stock market. But when that thing goes down in half, their money disappears. So they should be. But what will gold do? Will gold and silver go up when the market goes down?
Absolutely. It has the exact opposite effect. You have a scenario where there is money that people have that needs to be put someplace. We know leaving it in cash doesn't give you any return. And that so-called great 3% inflation rate just continues to deteriorate that cash savings. So it needs to be put to work.
So what if Trump... Well, okay, but here's a question. Donald Trump has surrounded himself with some Wall Street players, okay? He says he wants to deregulate business and make it easier for some of these huge multi-billion-dollar projects to get rolling. He says he'll raise tariffs if he has to make it more competitive for the market, to bring the manufacturing bases back. Says he's going to cut corporate taxes and taxes on the middle class. So if he does the things he says he's trying his best to do, with the help of some kind of a Congress, if we can get Nancy Pelosi and Chuck Schumer to quit screaming at the White House, if we could figure out a way to get everybody in a room and work together for once, if he's able to do these things, could he stave off a massive fall in the market? Because if you bring back jobs, at the end of the day, people got money in their pocket, they're going to spend it. So could he stave off this fall?
He could stave it off if he was elected 4 years ago. Economics is not a fast thing. It's a slow thing.
Wow.
The things that he's talking about doing are going to be important because that's what's going to lift us out of the trouble to come.
But he can't fix... He can stave it off maybe. If he was 4 years ago, he could have maybe have. But at this point, you see the market going from 21,000... I'm going to just throw a number out. I see the market going from 21,000 to 18,000. At some point, there'll be like a 6 months where we see an adjustment. And of course, that means a lot of money is going to evaporate. That means the value is gone. It was paper money. But if people have some gold and silver maybe in the safe or in IRA accounts that protect the value, they're going to be okay during that adjustment.
Yeah, they're going to stave that loss. People don't typically move everything; they move portions. Okay,
Right.
And that's great.
You should.
Diversification is important.
Right.
When you diversify, what you're saying is, I want this gold and silver to go up in value greater than or equal to the loss I'm going to take in the stock market.
Mm-hmm.
It's going to keep me in a neutral playing field.
Right.
Some people do more, some people do less. There's a personal preference there. The important thing is it's the counterbalance. That's the important thing.
So if people come to your website at noblegoldinvestments.com, you have a website there that helps inform them, helps them get understanding the average person like myself, lay member, if you will, or certainly a shade tree economist, I'll call myself, okay? And that is, now I look at it from a biblical standpoint. I heard you mention that earlier. It's better to you want to be the lender and not the borrower, okay?
Correct.
That's in the Word of God. And also, it's better to give than receive. And I understand the economics of being financially responsible in the kingdom of God. There's certainly tithing, and God, if you give, it shall be given unto you, good measure, pressed down, shaken down, running over. Okay, I understand the biblical principles of responsibility as a Christian. But also, you have to understand you can't invest in irresponsible people. And right now the federal government has been irresponsible. So I want to invest in something that's more, God made the gold, okay? Absolutely. I feel a little better about the gold and the silver since he made it. And you're saying folks should...
It's the same currency that was used back in the days of Jesus and beyond as well.
Right.
It's the same exact currency.
Right. Hey, did you hear about the fact, the dams that are flooding out there in the spillway? Did you hear that water that come rushing out of there has uncovered quite a bit of gold up there near Oroville Dam area?
I heard that. I don't think I'm ready to grab a shovel and go up there yet, but I heard that, yes.
Going forward here, it's good to diversify. You've shared that with us. There's a lot of folks that are listening. If they have some of their net worth in their home, that's still a good thing. They should have some of it in gold and silver. And if they do have an IRA, have an IRA with a gold or silver, base. Let that be based on that. And if they are going to be in the stock market, maybe a little, but you kind of say diversity. Savings, how about savings? Just cash in the bank. But you're saying IRA is better than that because the currency can fluctuate the value of it. You're better off with gold and silver.
If you were seeing an interest rate on your savings account equal to inflation, it would make sense to have cash in the bank.
But right now you don't.
When you have that kind of diversity, you're losing money by holding cash. It's a very unique time, and it's terrifying at the same time, because it's those of us who are not young. We know the old saying, "Cash is king." Dollars in your pocket were better than anything else you could have, because that was money. But those days aren't quite the same anymore, because there's such a loss to holding just cash and not having it go to work for you because of that lack of an interest rate. And even though they're going to raise the interest rates right now, it's not enough to counteract the cost of inflation. And we see that when we go to the stores. And it's not enough to counteract the loss of the dollar, just the weakness of the dollar in general. So it's one of the few times where cash isn't necessarily king. And we did a little article on that on our website too, when cash isn't king. It's interesting. I think people will find it an interesting read.
Now we do have to be fair and balanced here, if you will. Has gold ever taken a major fall in its price? Gold and silver, has it ever really? I know it can go down, but has it ever taken a fall has it ever lost its value in half like the U.S. dollar?
In half like the U.S. dollar, it's gone down. The all-time high on gold is just under $1,900 an ounce.
Okay.
Now it didn't happen overnight, and that $1,900 an ounce, interestingly enough, was right in 2008.
Wow.
When the market fell apart, gold was going up.
Do you
So
see?
you see there where gold did its job. It was a counterbalance. But then we had all that quantitative easing.
Yeah.
And you had a lot of manipulation in the gold market. So it lost value. It came down. But what it hasn't done, it hasn't disappeared.
What about silver? What did silver do during 2008? When gold went to $1,900 an ounce, what did silver do?
$50 an ounce.
So do you see this coming again? I mean, you're setting at 18 and silver's at $18 an ounce. Gold's at $1,200 an ounce. Do you see this going there again in the next 24 months?
You know, I do. I don't know if we see the $50 and the $2,000 in the next 24 months. And I'm out there, and you can, you know, it's common knowledge where the metals go. But I think that you could see $2,700 an ounce on gold in the next 3 years, and you could see $110 in silver in the next 3 years.
Unbelievable if it does. If somebody is putting some gold aside now in anticipation. I don't see gold and silver dropping much further than where it's at, so it can only go up. So sometimes when the economy is struggling in the market, the stock market, that's the time when gold may be raising in its value. Charles, you're with Noble Gold. Your website, of course, is noblegoldinvestments.com. That's noblegoldinvestments.com. Folks, if I'm going to put in this video, I'm going to put the links below, folks, where you can click and go straight there, get a hold of Charles, find out more. Go to his website, find out more about investments. Do your homework, you know, and be smart and be diversified in everything you do. Give the Lord Jesus Christ all the credit in everything you do, because if you follow his economic plan, you can't go wrong.
Amen.
Charles, thank you very much. It was a pleasure to speak with you. This is the first time you and I have talked, and I truly enjoyed it. I like listening to someone who knows what they're talking about when it comes to the economy. So it's really good.
It's been my pleasure. Thanks, Paul.